How to claim free Robinhood stock. Managed investment funds are investment schemes that pool the funds of various individual investors. The funds acquired from the investors are then invested by well-experienced fund managers in a wide range of asset classes, including bonds and property, in line with the stated investment objectives of the managed funds. Managed funds in Australia require an investor to invest in the funds. The investor is then allocated various units that represent an equal number of the market value of the investment portfolio. The units normally have a dollar value, which is referred to as the unit price. The managed investment funds will earn income during the year that are in the form of dividends, such as property fund share or bonds and cash funds. The funds may also make profits based on the sold investments. The law requires that the income received from the funds and the realized capital gains of the funds be paid out to the holders of the units as fund distribution. Managed funds are a vital investment tool in the Australian financial sector. The funds provide investors with adequate control over the investments without the time-consuming day-to-day management that is normally required by other forms of investment. Managed investment funds enable diversification of funds. The funds allow access to various managers of funds, companies, country sectors, and asset classes. However, such can only be achieved when an investor has lots of money to invest. The other advantage of managed investment funds is that the experts who are entrusted with the duty of ensuring that the funds are administered appropriately manage the money that is held by them. An investor is also allowed to select an investment strategy and to choose whether it would be appropriate to invest in the fund that is designed to deliver the required income. There are various factors to consider when selecting managed investment funds. One is to determine the amount of risks that one is comfortable with. An investor is under an obligation to consider the period for the investment and the objectives. While considering the objectives, an investor is under an obligation to establish whether the investor will be focused on capital growth or returns. In addition, it will be important to determine the types of asset classes or sectors that an investor would want to invest in order to maximize on the investment option.